Well, to discuss exactly what to be keeping an eye on in the week ahead, I'm pleased to welcome here at the desk with us this morning Peter McGuire from xm.com. Peter, pleasure to have you on. Thanks for joining us. What exactly should we be watching? I imagine, well, wages, very, very important, but jobs, particularly in the context of the RBA, because that is one key aspect they are watching.
Exactly. Good morning, Leanne. You know, the job side, 14,000, they're saying that you could hit that number this month. As far as the read, 2.3% has been unchanged as far as year on year as wage price growth or wage growth. So, you know, it's whilst we think it's a strong number, and yes they are, there's still a very fractured economy. There's still a lot of people in the 30s and 40s and 50 age groups having multiple jobs, working on ABNs and all of these sort of things. So if you believe the numbers, and this is going to be Judgement Day this Saturday because there's an election and they don't happen too often, and it's going to be a fiery, I think, week and a lead up from political side and what impact these numbers have to the decisions on Saturday as far as a voter.
Last week we heard from the RBA, of course, and they are hypersensitive, it seems, to the labour market. Hypersensitive.
They're being told.
Yeah, well, if we see any little bit of deterioration, even just a small uptick in the unemployment rate, say to 5.1%, do you think that will tip them over the edge next month?
I don't know about next month. I think this week is just very, very crucial. It may push them, and I think it's going to be a change. If it's a changing of the guard, then it's a different set of rules, it's a different set of campaigns. Everything changes if it goes to a Labor government. If it stays with status quo, and you never know, Morrison may get there at the end, there's been no doubt that central bankers are looking at the same sort of ideas and concepts. How Trump plays hard on Twitter with Jerome Powell. Possibly the same methodology works here without the Twitter, but pressure saying, well, look, you know, we've got an economy, it's stalling. Do we want to see lower rates? And that could be the next process that runs out in, say, July or August. If Labor get in, I think we're looking at a 65 handle for the Aussie dollar, if not lower, if you see a drop in rates.
Because it is currently hovering at about 4-month lows, isn't it, for the Aussie dollar at the moment?
69 something.
So not just with the Labor government, but obviously if those employment numbers this week are on the softer side of things as well, would you expect further weakening?
Well, I think so. Look, and then you look in the big picture as far as those trade talks, and we're a proxy for China.
Yes.
And, you know, you had equity buying by the government there the other day as far as the market's trying to get that, you know, ratcheted up a little bit in China. So there's no doubt that you're going to see a continued push as far as softness in Chinese economy and the equity markets, and we'll play into that as well here.
Yeah. Look, you mentioned the election obviously coming up. Last week we sort of saw the campaigning continuing, confirming the significant policy differences between the major parties there.
Sure.
With the prospect of a Labor government, of course that is according to the polls there, from an equity standpoint, you made mention of the reaction in the Aussie dollar. Would you expect more volatility this week? I mean, will markets be on tenterhooks ahead of the election? First
off, yes. If you didn't have those trade talks coming out of China as far as, with the president and what they've just concluded, I would say that that'd be just a status quo and probably edge a little bit lower. But now that the Chinese engagement and with the US, I think that's going to put continued pressure to our economy and to our dollar. And I think that that's just going to be a work in progress. And let's see what happens volatility-wise to the Asian market over the next 2 to 3 days.
Yes.
If there's a downdraft and it gets smacked down, say 2 or 3 or 4%, we're going to get, we'll hemorrhage off that.
Well, interesting last week. I mean, Asian markets were weaker. Chinese shares were off 4.7%. Japanese shares were down 4.1%. But our own Aussie share market was pretty resilient. I think we only fell about 0.4%.
Yeah, I know. Well, that may be, they're ahead of us, possibly.
Yes.
Let's just see what happens over the next matter of 2 days, and that'll give us a clear idea. But yes, it's going to be a wild week. Funny enough, you could be sitting here next week with the same sort of values, but in that period of time you might be down 2%, up 3, down 2 and up 1. So I think you're just going to be a volatile sort of week, and that's quite standard in today's environment.
Sure. All right, let's move on to what we have coming up stateside on the data docket. It's actually quite a busy week. On Monday, consumer inflation expectations will be released. Then on Tuesday, we have a whole bevy of data. The National Federation of Independent Business releases its business optimism gauge. We have data on export and import prices and the weekly reading on chain store sales. Then looking ahead to Wednesday, it is another heavy day. Retail sales, industrial production, the Empire State Manufacturing Index, the Housing Market Index and capital flows data. Thursday, we have quite a bit of data for housing starts and building permits, alongside the influential Philadelphia Federal Reserve Manufacturing Index and weekly figures on new claims for unemployment insurance. And then finally on Friday, the Conference Board releases the leading index for April, and the University of Michigan Michigan releases the preliminary consumer sentiment index for May. Very, very busy week for data, it seems, in the US.
Yep.
What in particular, what would be a standout for you that you think perhaps could excite markets this week?
Well, as coming out of Philly, what happens, the retail sales, and I feel as though that the market will be the market. And if the Dow comes off and if the S&P comes off continued pressure, and you've got the disconnect there, and it still looks like, they've been invited back to go to Beijing for another round of talks, as far as Lighthizer and Mnuchin, then that's going to create a sense of uneasiness. And like it or not, with new information coming through, the old story is that there is an unsettling in the market. And as far as risk is concerned, I think it's going to be risk off, and that's going to create a little bit of uncertainty over the next matter of trading days.
Yeah, absolutely. And then anything else? I mean, we have a look at Europe or China. I know that there's also some important numbers coming out of China.
We could talk for 4 hours. We could be here till 2 o'clock. You've got battleships heading into the Persian Gulf. You've got unknown as far as Pompeo and what's he doing in Iran. It just seems to be, I think that you'll probably have some form of warfare. I wouldn't be surprised over this summer period. Then he's off to the likes of Russia, and to contain that, what's happening in Venezuela seems to be a total civil disconnect, and they'll need elections there. So, as far as the global situation, I make reference to those countries because they're large crude producers, and they've got the largest crude reserves as far as Venezuela in the world. You've got Iran being, sanctions coming in, and what's happening as far as nuclear and all those interactions across the Mideast. So, yeah, there's going to be a heavy week ahead.
All right. A volatile week, as you made mention earlier. Yeah, lot to be watching there. Peter McGuire, thank you so much. We really appreciate your time this morning.
Thank you, Leanne.
Peter McGuire there from xm.com.